Stocks climb following a strong Q2 GDP print, but the rupee slips to a new low against the dollar. Auto and metals gain, while the consumer durables and realty drag.
Mahindra and Bajaj Auto post mostly in-line wholesale numbers in November. Tractor sales particularly see a strong pickup, with both Mahindra and Escorts reporting high double-digit growth.
Silver hits a record high above $57 per ounce as Chinese inventories drop, while copper stamps a new high on output cuts by smelters and mining disruption. Palladium too climbs as inventories in London are seeing a bit thin.
India springs a GDP growth surprise, with Q2 seeing an 8.2% print versus an estimate of just 7.4%, though nominal GDP growth is just 8.7%. Most economists revise their FY26 forecast, but the data sparks a debate over a rate cut. CNBC-TV18 Citizen MPC votes for no cut. Hello and welcome to Halftime Report, live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Patra and with me is Vinny Motiwala. Well, just look at the markets. We did hit those record highs in the early part of trade, but we haven't been able to sustain the momentum because we've seen the rupee, in fact, fall to a fresh new record low in today's trading session. 89.75 plus is where the rupee depreciated to. And now you can see a little bit of a pullback which has taken place. Remember, it is the worst performing, one of the worst performing emerging market currencies, just after the Argentinian peso as well as maybe the Turkish lira. So you can get a sense in terms of the 4 to 5% depreciation that we've seen for the rupee this year itself stacks it to be one of the worst performing currencies within the emerging market basket. But before we get to other news, just want to point out Walmart, which should come up for you. That stock is up around 10% at this point in time, and big news coming in for Walmart at this point. We do have news that one of their new drug applications, which is Xenic, which is an antibiotic which they were developing in order to treat superbugs which were not reacting to other antibiotics, has in fact been accepted by the US FDA as a new drug application. So that's a big feat for an Indian company. And as you can see, the stock is up 10%, Vinny.
Hi, absolutely. So that's what we'll be keeping an eye out on today. But the markets have come off the day's highest point. So that is what we're watching out for. But a whole host of auto sales numbers for the month of November have been coming in as well. And putting the spotlight on that one, M&M's total sales for the month of November had risen by 19% on a year-on-year basis, while total exports saw a tick of around 5%. My colleague Sudarshan actually spoke to the management of the company on their performance. Listen in to a slice of that conversation.
We built 56,336 SUVs domestically. That's a growth of 22% for the month, year-on-year. And if you see year-to-date itself, we are at about 18% growth, volume growth, which is in line with the mid to high teens growth we projected for our SUVs portfolio as well. So I would say November was driven by 2-3 factors. Of course, one is there's continued traction coming post GST 2.0 reforms. So we see some of that continuing to play out as well. There was a little bit of pent-up demand, I would say, which got missed in October because we had some logistics challenges across the industry. So that's the other thing. And then fairly strong wedding season in North as well. So all of these 3 factors helped out in November on both the SUV front, and we have had a strong growth on the LCV, on the light commercial vehicles front as well. Going into December, I think the focus changes a little bit. We'll be focused primarily around ensuring that the dealer stock largely get consumed and be delivered to customers, because there's a wind switchover which happens between December and Jan as well. So really, that's what the entire focus is going to be on retails. But I see the momentum generally continuing overall across the portfolio, whether it's Scorpio N or XUV3 XO or any of the other models in the portfolio that we have.
So do you think that we are approaching the year end, so will the discounts increase? So normally, historically, we have seen that discounts at the end of the year do increase compared to previous few months.
Yeah, we're generally a little bit disciplined on where we put discounts, and we are very targeted. So I would think that specific variants within certain models will have some discounting going on. just to kind of ensure that the stocks get maintained and optimized at the right level. But beyond that, the reality is December is a month of folks trying to get a best deal. And so we might do something targeted basis, but really something which will be well within what we normally do in December, because the secular trend on growth continues to be strong.
Great. So on the EV front, so you had two EVs till now. Now that you are coming with another one, mainly XEV9S, I'll talk about, not the Formula Edition. And the launch is happening in the month of, not launch, so bookings will start and deliveries in January of 2026. So right now, if I'm correct, the range, that monthly range is in the range of 4,000 to 5,000 units. So what exactly, if I say including XEV9S, what will be the monthly run rate that you are looking at?
Yeah, it's very early days, to be honest. So far, the traction has been very positive from our media friends who have reviewed the vehicle. But our expectation is that we should get good traction on 9S. And so, like I said, I won't be able to talk about demand, but what we are doing on the production side is we are operationalized about 5,000 monthly capacity between the two models we have, which is 9E and the E6. With the third model coming in, we're increasing that operational capacity from 5,000 to 8,000, which will kick in the late part of March, early part of April next year. So in some ways, if you look at it, that could be a proxy you can think about. But between the three models, our expectation is that we will be using about 80-85% of that 8,000 capacity.
Okay, so one thing just I want to ask, because see, SUV has been in the focus now for the last few years. And now everyone, including you, has been going very aggressive on EV front. So customer-wise, now suppose that few customers earlier were looking for SUVs of yours, Thar, Bolero, and etc. Now, do you think the same kind of customers are going towards EVs, or for EVs just it's a completely new set of customers?
Yeah, we've seen both of that play out. You're right. The initial traction that we had on the EVs, especially BE6 and XEV9E, was primarily from a customer who traditionally doesn't buy Mahindra. Almost 80% of the customers who came for these two models were non-Mahindra buyers. So in some ways, it opened a whole new category for us. But having said that, I think the feedback we've gotten over the last few quarters is folks are looking for a vehicle which has the authentic SUV stance, has the kind of road presence of an authentic SUV. And with 9S, we are bringing in a product which caters to that audience, which, if I may call it, that would be the loyalist, if I may put them, label them that way. So my sense is between these three models, you'll start to see that core part of the market come into play. But at the same time, the previous two models, which are very design-driven, very, very forward-looking, those start to attract a different segment of customers for us.
Great. So this time, for this month, what I have seen in the Vahan registration data, one segment that has been it has surprised positively is the commercial vehicle segment. And I can see that even your less than 2 tons, whether the growth is kind of 5%, but between 2 to 3.5 tons, you have seen a growth of 20%. So if you can talk about some of the factors that are aiding growth in commercial vehicle. And another question regarding three-wheelers. So you have given 8,568 units. How much of this would be coming from electric side?
Yeah. So I'll comment largely on the light commercial vehicles. Three-wheelers is a separate division. I might make a point or two. But I think the good news across the commercial segment has been that the GST 2.0 has triggered the next wave of growth for us, right? For the industry as well as for us. Really, that segment, if you look at it, is incumbent on TCO numbers, right? Total cost of ownership and your viability of your vehicle operations is critical for that. And with the GST cut, you basically made the TCO much more attractive. And it's a segment over the last couple of years, if you think about it, has not grown as much. It's been fairly muted. But the replacement cycle, which was impending, that got triggered by the GST 2.0. And most of that we are starting to see in the 2 to 3.5 ton category. Less than 2 ton is a little bit muted, but it's also because I think the industry trend is moved closer to the 2 to 3.5 ton category as well. So some of the industry movement is happening there. That's getting reflected in the growth numbers that you talked about. But in general, we're delighted to see that the replacement cycles have started to kick in for the industry, and we're able to take large benefit out of that as well.
So, do you agree that new cycle for CV has begun, or like we are into this new cycle? Because some of the brokerages have written about this, that we are into a new cycle and it might go on for another almost 2 years. Do you agree with that?
Yeah, so the commercial segment generally works in replacement cycles. Somebody buys the vehicle, uses it for about 4 to 5 years, and then after that they put it on the second-hand market, take the money which comes out of it, and put it as down payment for 1 or 2 vehicles, right? So that generally is the replacement cycle which happens. That cycle of 4 to 5 years should have happened about 6 to 12 months ago. It didn't happen primarily because the TCO equation wasn't great. But once the GST toed auto came in, I think the TCO became attractive. And therefore, we also believe that the replacement cycle is starting to kick in at this point in time, which should have happened a little bit earlier. But I'm glad that it's happening right now.
Okay, that's the management of M&M, but we need to take a short break at this point in time. We'll get you more on the markets, a lot of stocks in focus, and the finance minister, in fact, has tabled the Health Say National Security Bill in the Parliament as well. So that is something that we will also be touching on. Stay tuned.
Welcome back to Halftime Report on CNBC-TV18. Like you can see at the bottom of screens, FM has tabled the Central Excise Bill 2025 in the Parliament, as well as the Health Security Say National Security Bill in 2025. Obviously, what this will be doing is that with this, the government is proposing to hike excise on tobacco products, including cigarettes. Now, to discuss more on this, we have Vivek Johri, former CBIC chief, to talk to us about this and what this means as well, and what more should we be keeping an eye out on. Good afternoon, sir. Thank you so much for joining us on the show. As of now, these two bills have come in, the Central Excise Bill 2025, as well as the Health Security, say, National Security Cess Bill. So what should we be keeping an eye out on in terms of this? And now, after this comes into play, how do we see this merging with this whole GST ecosystem?
Yeah, thank you and good afternoon to your viewers. So if you recall, when GST 2.0 was introduced and the rates were recalibrated, the 28% rate, which was applicable to a large number of demerit goods, and which was effectively the demerit rate, was also done away with. And instead, a 40% rate was introduced. The only exception that was made on 22nd September 2025 to this rate change was that for tobacco and tobacco products and cigarettes, etc., the kicking in of the new rates was kept on hold. The reason, if you recall, was that compensation cess, the tenure of the compensation cess was initially to end in 2022. But because loans had been taken by the central government during COVID times, when GST revenues were not doing that well and states needed to be compensated, and those loans had to be repaid, the GST Council had decided to extend the tenure of the compensation cess till 2026. The reason being that whatever revenues were raised by way of the compensation cess, they were being used to repay the loans that were taken during the COVID period. Now, that tenure, the loan is likely to be repaid anytime now. And that is when that is why the GST Council had authorized the finance minister to take a decision on when to discontinue the old rates for tobacco and tobacco products, and to allow the new rates to come in.
Sure.
I think this is a preparation for that, and the sole purpose of at least the Central Excise Amendment Bill appears to be to compensate the rates. I mean, to readjust the rates in such a way that the incidence of tax on these products does not actually go down, and it is maintained at the current rate. So if the 28% rate has been done away and it's been replaced by a 40% rate, let's say on cigarettes, then what happens is that there used to be a compensation cess, which was a mixed rate of specific and ad valorem. There was a basic excise duty, and of course there was a national calamity contingent duty also, which was like a duty of excise. Now, these are all going to be replaced by a GST rate of 40% and a basic excise duty, which will sort of more or less bring the incidence of tax to the same level as what is prevalent today.
Okay.
The date on which these new rates will come into effect is to be notified, but before that, the bill has to be enacted. And this is the first step which the finance minister has taken by introducing the bill in Parliament.
Okay. So, Mr. Johri, just, what exactly would be the impact to the end user? It's supposed to be neutral, net neutral to the end user when it comes to the cess on tobacco?
Look, I've had a look at it very briefly because the bill has just been tabled. So I've had a look at the schedule, for example, for cigarettes, and there is some increase in the rates that have now been prescribed. But these are scheduled rates. So these are rates that will appear in law. Whether these will be the effective rates, we have to wait and watch. If the objective is just to maintain the incidence where it is today, then the government could always issue a notification and notify the effective rates below what has been prescribed now in the Act. But there is, I find, a marginal increase in the rates, at least for cigarettes. Yeah. In the case of pan masala, a new cess has been introduced. And like you mentioned, for that purpose, the Health Security, National Security Cess Bill 2025 has been introduced today. That is a new levy, and that is machine-based. It's going to apply to all manufacturers of, pan masala. It will be based on some 2 or 3 parameters like the speed of the machine, the size of the pouches, and then a fixed amount has been prescribed, depending on how these parameters, different combinations of these parameters. And so that is a new levy which will be used by the centre for, taking care of public health and national security.
Mr. Johri, I just wanted one clarification from the company's standpoint, where the manufacturers would be involved, where the cess is expected to be on the production capacity and not on the sale. So would it be on the production, on the utilization of the manufacturing capacity that you have? Say, for example, it's 80% of the 100% that you've used, or is it going to be on the entire production capacity that you have, irrespective of how much you're utilizing?
It's a normative levy, so it's going to be on the production capacity, not on the actual production. Okay. The only, I've quickly been through the bill, and the only, caveat I would like to put in is that if a few machines or a machine is not used at least for a period of 15 days or more, then there's a provision to give an abatement, for that particular period. But otherwise, the rates that have been prescribed are dependent purely on the size of the pouch, what is the weight of the pouch, what is the speed of the machine. These are the 2 major parameters on the basis of which. So it's actually a capacity-based levy, not on the actual production or sale of, pan masala.
Okay. Just a quick one. So the revenue in terms for the central and state government with these excise duty hike will remain same, or do you think there is a possibility of an increase given that excise duty hike number that has come in for the cigarette side, at least it's a bit higher like you were mentioning?
So, look, please do remember that excise is also a duty that goes into the shareable pool. So it's, as per the devolution formula prescribed by the Finance Commission, excise duty revenues are shared between the centre and the states. And GST, of course, gets split, between the centre and the states. It's only the cess on pan masala, which is going to be used by the union, which is the centre. And but the other, 2 taxes will continue to be shared as they're being now. So, I don't think it will adversely impact the revenues of the state governments, if that is what your question is.
All right, Mr. Johri, we've run out of time, but not out of questions. So I'm sure we're going to revisit it as more details come out, considering that this has now been tabled in the Parliament. We need to take a break, but on the other side, we're going to go full tilt on the markets. It's just about consolidating. But what are the stocks that you need to focus on at this point in time? We have Aditya Agarwal who will be joining in next. Stay tuned.
Welcome back to Halftime Report on CNBC-TV18. As of now, the Nifty is down around 20 points. 26,183 is what the Nifty is trading at, almost near the day's lowest point. But which are the stocks that are moving around in today's trading session? We have Vivek, who's joining us to take us through that roundup. Vivek, over to you.
Well, when you're looking at the markets, especially the market breadth has deteriorated quite a bit, especially in the last half hour or so, especially since you did see the rupee weakness that came about. Now, in terms of individual stocks, the ones that we're tracking is, first up, have a look at KFin Technology. There's a Kotak, institutional equity report that's upgraded the stock higher by over 4%. Tamil Nadu Mercantile Bank, this particular stock, one of the top gainer as far as the NSE 500 index is concerned, almost 6% higher. IEX, we discussed so much about this particular name on Friday on the back of the Aptel hearing that happened. Today, the stock was high by almost 5%. But remember, it's status quo as far as IEX, the future of IEX is concerned, at least at the current moment. The other stock on our radar, Tejas Networks, the first tranche of the PLI has been received from the Department of Telecommunication. And the back of that, stock seeing a bit of a relief rally, 4% higher. On the other hand, a lot of EMS stocks under quite a bit of pressure, especially Keynes Technologies. Remember, the company actually held an analyst meet in the week gone by, as faced concerns in terms of working capital pressures. But despite that, stock lower, and even Amber Enterprises giving it company on the way down. Whirlpool, remember, last week we saw almost 11% block deal take place. There has been a press release, that has been issued saying that further stake sale is being considered, and the stock low by over 6.5%. Excise duty, as far as tobacco is concerned, is being mild. A lot of news flow regarding that. All of these stocks will remain in focus as we wait for the finer details to come about. And lastly, have a look at one of the fertilizer names, Coromandel International, the top laggard as far as the small cap index is concerned, has recovered a little bit, but still low by over 1% today.
Okay, all right, Vivek. Thanks very much for that. Well, we do have Aditya Agarwal, Head of Research and Investments at Invest4Edu, joining in to discuss the technicals of the market now. Aditya, hi, welcome to the show. Well, it's definitely a market where we're just about consolidating, though we've hit those record highs. Just wanted your sense in terms of how the rupee weakness, the depreciation that we've seen, the sudden sharp fall that we saw in today's trading session, did that change the way you probably allocated your money today or the calls that you made?
Afternoon, Ekta. Thanks for having the show. Absolutely. In fact, if you take a look at historically, whenever we see a sharp depreciation in the rupee, that has a rub-off effect, at least for some time on the Indian markets as well. For a few weeks to maybe a month, markets also tend to become a little volatile and a little corrective in nature. And that is something that we're witnessing from the morning trade today as well. After that gap up open in the markets, we've given up the gains from the top, and plus that also happens to be a minor trend line hurdle somewhere around 26,300 above those zones. But if you club it with the rupee and the Indian markets, if you plot both the charts on one frame, you will usually see whenever rupee sees a sharp depreciation, Indian markets also sees some kind of a profit taking, at least for short term in the immediate phenomena. And heading into the December month, that is likely to continue as well. My sense is market will remain a little choppy and volatile for the rest part of the December as we start off the December series. So one needs to be a little nimble-footed and position your portfolio accordingly so that if there is a spike in the volatility, you can realign your portfolios accordingly.
Okay, Aditya, and a quick word in terms of the stocks. If you could just give us a quick take there.
So morning, good afternoon, Vinny. So there are a couple of stocks that I do like from a trading perspective. The first one is Varun Beverages. This is one stock which is actually corrected significantly, and now it's formed a decent base, and from there it's showing some signs of a recovery. So at current levels, I think the risk to reward is in favor of going long for Varun Beverages. At current levels, I'll be a buyer for a target of 520 on the upside, place a stop loss at 470 on the downside. The second stock is Bank of Baroda. Surprisingly, the PSU banks continue to show strength, and Bank of Baroda is one stock which has been going strength to strength, and today we witnessed a fresh breakout from a consolidation. So Bank of Baroda is also on a buying radar for a target of 320 on the upside and a stop loss at 283 on the downside.
Okay, thank you so much for that, Aditya. But on that note, we're actually going to zip into a very short break. And on the other side, Manisha Gupta will take us through a conversation with Sanjay Sacheti, country of Olam Agro. Stay tuned in for that conversation.
Welcome back, and joining us on the show now is Sanjay Sacheti. He's country head India region at Olam Agro. Mr. Sacheti, hi, thank you so much for joining in. First of all, the big number that we continue to see on the crop, if you look at the government estimates for Kharif, have been much on the higher side. Rabi sowing is higher than last year as well. We are looking at a record rice numbers. Wheat is much higher as compared to last year as well. My first question to you is, how are you looking at overall production within India, acreage versus yields here?
So, Manisha, I think it has been a problem of plenty, which we are staring at. We have had very good precipitation. Reservoir levels have been pretty good. So, Kharif as well as Rabi both are looking very good. Kharif, though, we had some sporadic, crop losses because of because of a spatial distribution of rainfall. But if you look at Rabi, I think the kind of reservoir levels which we are experiencing right now, they are wonderful. They augur very well for the forthcoming Rabi crop. And we expect all the Rabi crops to be to fare very well. Obviously, this would lead to surpluses in almost all the commodities. And we'll have to figure out how do we manage that part, because the global markets are also bearish, and they are not looking for the extra grain of any commodity from India really in a big way.
Oh, absolutely. The other thing really is about higher production and the prices trading at or below MSP, and then we are importing cheaper imports as well, and the MSPs continue to increase every year. Would you say that there is some stronger structural policy change that needs to be done?
Well, agriculture is a very complex subject, and I'm just working on some recommendations for certain parts of the government right now on behalf of one of the chambers of commerce. And when we have looked at it, I think it requires a very comprehensive action plan. To give due credit to the government, I think the policy has been agile. Of course, but given the volatility which is there in the climate factors, in the global markets, as well as in the local markets, the government has a tough time, and they have to really navigate through multiple policy changes. Obviously, people can always say that policies are not consistent, but the environment itself is such that they really can't do much about it. They have to respond. So that brings us back to what needs to fundamentally change. And I think it is about making agriculture at the farm level as strong as possible. How do you make farmers stronger, either through collectivization or through last mile delivery of advisory services, or through market linkages? And not to forget, how do you introduce frontier technologies at the farm level? So there are multiple issues which need to be taken care of. But in the immediate short term, what we need to do is to give farmers as much support as possible. Public procurement has to keep pace. Obviously, the crop diversification is something which we have to look at. So while I am a proponent of public procurement to give support in the short term or early medium term, but how do we engineer a crop diversification beyond rice and wheat? Not so much wheat, but primarily rice is something which we need to think about.
Oh, absolutely. The other thing really is about the global trades, Mr. Sacheti, because even as we've seen tariffs and those concerns continue to be in the market, the geopolitics continues in its own way as well. But even with that, would you say that the global producing nations have done a good job in sense of stronger numbers when it comes to farm there? And that's exactly the reason we haven't seen food inflation, not just in India, but in other parts of the world as well. But do you see that continuing in 2026?
Well, the 25 has been very volatile from a government policy point of view. And I would say while there has been good availability and there are global surpluses, but the destabilization of the global trade and the uncertainty surrounding it has led to broken supply chains. And, most nations have been forced to reorient how they do, how they procure for their requirements. So this has led to some kind of impact on the prices. And I would say that a part of the food inflation is also on account of this uncertainty. Going forward, given how US and China, the two large nations, have started, coming down in terms of aggressive measures which they had taken earlier, I think things should settle down as we move into 2026, and food inflation should start coming down in most countries. In India, we have already seen this coming down, and that's a confluence of various factors. Locally, we have had good monsoon and good crops, and globally, our major commodities which we are importing, pulses and oilseeds, largely pulses, have seen deflationary trends. Globally, I think as these tariff measures get rationalized, the way US and China have done in the last 3-4 weeks, I would expect that food inflation would definitely get diluted as we move along.
Okay, food inflation will get diluted as we move forward as well. Thank you so much, sir, for joining us, as well as thank you so much, Manisha, for taking us through that conversation as well. But on that note, we're going to slip into a very short break. Viewers, don't go anywhere. We'll focus on walk hard, which is buzzing in trade. So stay tuned for that conversation.
Welcome back. Well, we have Walkhart, which is up around 11% This is after they've received not the US FDA nod as yet, the new drug application for their new chemical entity, Sensex, which is basically an antibiotic which they have in their portfolio. But it's a big deal because it's the first Indian company which has reached so far with a new chemical entity. We do have Vishal Manchanda joining in to discuss this. Vishal, hi, welcome to the show. So just give us a sense in terms of the market size for Sensex, if potentially it does see the light of day with Walkhart.
Yeah, hi, good afternoon, Ekta. I think this is positioned in a market for patients who are kind of tough to treat, anti-infective patients infected by gram-negative bacteria. So my sense is, if I look at all the drugs put together that go for this condition, it's about $1.5 billion currently, and the market is growing.
Okay, so you're saying the market size for this particular drug is around $1.5 billion in the US?
No, globally, and this market is growing every year.
So growing to what potentially?
So some of the new launches are growing quite fast. So some of the new launches, one of the new launches that is doing very well is cefiderocol from Shionogi. I think that's doing about $250 to $300 million and growing double digits.
Okay. So you're expecting maybe this Sensex could grow in double digits?
So I think once launched, potentially this is a best-in-class treatment is how I look at it from the data. So probably the best, kind of an antibiotic that would work in even most tough-to-treat patients. So the best antibiotic, I don't know how extensively doctors would use it, because since it is the most potent one, they would want to reserve it for the most sick patients.
Okay.
However, Walkhart can price it appropriately.
But Walkhart will then be a patent holder for this drug in the US if it does, see the light of day, right?
Yes.
Yes. So based on that, what do you think Walkhart could eventually make in a drug like this in the US in particular, because that's the most lucrative market?
So I think since I have this view, doctors would kind of want to use it for the most sick patients. But roughly, if I just kind of assign a 30% share in the existing $1.5 billion space, this can very well be a $500 million product, or maybe larger, depending on what share it takes in the pie and how the market grows going forward. Because emerging markets is something where access is currently less, and if they can expand access there is an opportunity.
So it could be a $500 million market for Walkhart globally?
Yeah, a peak sales opportunity is how I would look at. things currently based on existing market size.
Okay, I just had a quick question about the approval status. What, according to you, do you think that this has potential? Because one is that they've said that it's on fast track with the US FDA, and two, they've said that it's already been used on a couple of patients, which is on a compassionate basis in India as well as the US. In fact, data has said that they've used it on over 50 patients in the past year and a half, and that includes patients in the US. So do you think that the potential is already there, which the market is factoring in, that it's probably going to get final approval?
So my sense is approval is most likely a very high probability. And the data was very strong, like the phase 3 data was very impressive. So I think approval is very likely. A very high probability is how I would put it, maybe a 95% probability.
Oh, okay. All right, Vishal. Well, thanks very much for joining in and speaking with us. So that is Vishal Manchanda talking about Wockhardt, up around 13% for that stock. We'll take a short break, but we'll get you more on the markets once we're back. Stay tuned.
Welcome back to Halftime Report on CNBC-TV18, and look at where the Nifty is trading at right now. Still near the day's lowest point as we see it, 26,176, down almost 33 points in today's trading session. Broader run of the market too has seen the fall coming in from the day's highest point, and especially in a day where we saw it starting at those record high levels and then come off. So significantly underperformers coming in from the private bank side, but they look at HDFC Bank or Axis Bank, they were among the top tracks today for the Nifty 50. So bank is also down. What's doing well today is the IT pack, right? Look at HCL Tech, that's managing to hold on to that green side over there. And overall, Nifty IT holds on to gain, auto is holding on to gain, and metals, given the silver and copper prices, are also on the higher end. So Nifty metals among the top sectoral gainer. But with that, we're absolutely out of time on this edition of Halftime Report. Thank you so much for tuning in. Up next, Business Lunch.